Yo, what's going on, ladies and gentlemen? I hope you are all well. So this video is going to be quick. The message of this video is to not worry, because crypto is not over. It's not the first time that cryptocurrency has received negativity. You're hearing it across the board. People are saying that if you were invested in ETFs, then you would have fared pretty bad. Bitcoin ETFs, that is. But what you've got to understand is this. Those who were using ETFs were probably only committing anything between 1 to 5% of their portfolio. Now, this was from an article from Investors Business Daily, just talking about the idea why Bitcoin ain't so much of a great hedge against inflation. But we don't think of it like that, ladies and gentlemen. You see, people will always scrutinize whatever financial asset has been put out there as a means to be a store of value, or a hedge against inflation. We're talking about big titles right here, ladies and gentlemen, on an asset that is new. Bitcoin hasn't really seen market crashes. Bitcoin hasn't really experienced these phenomenal increases in interest rates. It's not stood the test of time. But this is the point which it is going to test, if it can withstand the problem that we've got in the world. You see, if cryptocurrency was really a fad, right, then at the slightest glimpse of recession or inflation, investors would have just wiped their money off the table. Now, the total market cap for cryptocurrency as such is right now somewhere around the 800 billion mark. Yeah, 869 billion. We had a lovely high of 3 trillion, ladies and gentlemen. That's a lot of money to leave the table, okay? But you've got to understand, look at the stock market. That's had a lot of money leave the table. So why is it any different? You've got to understand, ladies and gentlemen, that Bitcoin is a volatile asset. Now, even if we just look at Bitcoin since the last of the high up here on the 31st of May to the current down point, Bitcoin's down 37%, bruv. That is phenomenal. We go over to the S&P and then we look at that. Where's my S&P chart? Here we go. SPX. The SPX right now across the board is what? Zoom out and we can make sense of it. There's a high. Start a new one. And then go down to the current price point. It's down 24%. So Bitcoin in principle is, since the 31st of May, moved down 37%. And it's down phenomenally. But think about it, guys. It's crypto. It's always going to be volatile. Where am I going with this, man? I'll tell you exactly where I'm going with it. Why is crypto not over? Because the business model says so. That's why. These are leveraged positions, ladies and gentlemen. That means money has been borrowed. Money has been given to the trader who believes price is going to go down. And the exchanges, courtesy of Mr. Market Maker, have provided us the opportunity to exploit that narrative, which is why you see price trading so low. And then you've got all of these potential liquidation zones in the chart. So when I say cryptocurrency is not over, what I'm saying to you guys is the business model is not finished and it will never finish. Okay, we are in a state of capitulation. Just look at this. Let me just remove this for you so you guys can see it better on here. Zoom into the capitulation point and you can see that we are now lower. It lasted 2 days. Now it's continued down. We are now in a state of capitulation based on the net unrealized profit and losses in Bitcoin holders' portfolios. But if we just go back in time and we go over to this point in 2019 when cryptocurrency started to get a little bit of a reputation, Back when the big drop happened in Bitcoin, where many traders were capitulated. They just spent a little time in capitulation. We spoke about this in last night's video. And then we moved to the next point in 2020. They didn't spend much time in capitulation. This is where we are right now, ladies and gentlemen. At some point, Mr. Market Maker's gonna come back for his liquidity. Sorry about that. Nice little boomer moment there for you, ladies and gentlemen. Just to let you know, the whole stream is getting upgraded, by the way. Stay tuned for that. $23 billion worth of shorts, right? $25 billion worth of shorts are available for Mr. Market Maker to take. But we've seen more than that in the past. But this is for the chosen range between now at 20,000, whatever it is, going up all the way to 28,000. What about all the way up here at 47? People have been running shorts from there. People have been running shorts all the way from the high. And they're sitting nicely. Right? Cryptocurrency is an idea. Cryptocurrency is a belief. Cryptocurrency is a utility. If cryptocurrency is over, you have to kill the idea of cryptocurrency. And that ain't happening, ladies and gentlemen. You're not going to kill the idea of cryptocurrency because crypto does solve a problem. Time. Time, ladies and gentlemen. You can send money in a matter of seconds. Now listen, before we go even deeper into that sort of conversation, the next zones in the chart are pretty obvious. As long as the idea of the S&P itself is content with a 24% drop, and a 24% drop is enough for the market to start turning back up, given that we've got these several gaps in the chart, we would assume that at some point we're going to return to these points. So try not and lose your minds, ladies and gentlemen. Ignore the social media talking about crypto is bad, crypto is this, and crypto isn't going to last. They said Bitcoin wasn't going to pass the $100 and it wasn't going to pass $1,000. Who's laughing now? If they say it can't be done, it ends up getting done. And they're saying it now. Cryptocurrency is done. Well, cryptocurrency is going to undone that. Now, what is it? Why am I speaking so optimistically about cryptocurrency? Ladies and gentlemen, as I said before, price is irrelevant to me. I want movement. I'm a day trader. But I know there are people amongst you that are talking into your ears, saying to you, yeah, crypto is done now, man. I shouldn't have listened to you, man. I should not have picked up that Ethereum. I should not have picked up that ADA. I should not have picked up that Shiba. I should not have picked up anything. I just should have brought gold. But the business model, ladies and gentlemen, is here. And they're going to come back to it. So, ladies and gentlemen, going into the weekend, I will be warning you. Be mindful of volatility. Price action does have a way of enticing you to step in. Yes, we do have the red vector candles in the zones. Please be mindful. I always encourage everyone to pay themselves. I always encourage people to trade at the best times. If you were dealing with Forex, ladies and gentlemen, and you were only trading Forex, you know you'd only be able to trade from Monday, go all the way through to Friday, then Saturday, you would not be able to trade. Sunday, you wouldn't be able to trade until 10 p.m. at night UK time GMT, when the Asian markets open, or Sydney. Cryptocurrency is throughout. 24/7, ladies and gentlemen. 24/7 for you to earn money Monday to Friday for you to give it back at the weekend. Yeah, I know. Yeah, Tino, but what about the volatility at the weekends? Yeah, I get it. Well, really, if you haven't made money during the week, why are you going to come to the weekend to try and make it? When the markets are quiet and we get little bursts of movement. Don't get me wrong, I love volatility. That is the narrative that I talk about every single day. But guys, improve the odds of a trade playing out. You can take a trade at the weekend. I remember I did a video for the patrons of the channel quite some time ago where I took a trade on a Saturday and I was documenting the whole thing. And every video update that I did, price was still in the same spot. It was something like 11:30 in the morning on Saturday. I'd update them again at 3:30. I'd update them again at 8:15 in the evening. Price was still in the same spot. Now, there are people out there that will do that. They'll open a trade on a Saturday and they're just waiting for that moment for volatility to come in. If the volatility is going to come in, ladies and gentlemen, and in price is just doing nothing, and then it comes in, okay, what's the one guarantee that the volatility is going to fare off? The retrace. Exploit the retrace. Let the fake move happen and then take advantage of the retrace. Because then you'll wait for the proof of the move. Going into the weekend, guys, it has been a very difficult week to say the least. Cryptocurrency has taken a dive to the downside, but the business model will always succeed. They will always go back to the liquidity. Now, someone's probably going to say, so Tino, they're going to come back to the vector candle that's sat all the way up the top right here. Probably. Probably will. I'm not going to say when. I'm not the guy that's going to turn around and say, oh, Bitcoin to 61,000 in 17 minutes. Bitcoin to 50,000 by the end of July. Huh? By the end of July? Whoa. What does he know? How does he know? What's July about? Ladies and gentlemen, listen. In the markets, right, you have options expiry, which is happening tomorrow. So we could get a little bit of volatility. So please be mindful of that. But to say Bitcoin is going to be a certain price at a certain point, that's not taking into consideration the idea of uncertainty that this game is all about. You've got to get used to the idea of not knowing what's going to happen next. And that's the whole point of probabilities, ladies and gentlemen. Get familiar with probabilities, and then you're going to ask yourself if a trade's going to work in your favor or not. Again, yes, there are vector candles in sight. Yes, there are more vector candle ranges in sight. We've just had the reset. They're increasing the interest rates. They're going to try and resolve this issue with inflation. Go back in time, ladies and gentlemen, and you'll know exactly what it is. Look at the S&P. Take every peak that happened, okay? There was probably an interest rate increase or an interest rate decrease, whatever it was. A recession, inflation. There is going to be a repercussion, and then it moves up. They absorb the idea of what happens in the future, and they price it into the charts. Remember, we are at capitulation right now, ladies and gentlemen, okay? So people now are losing their positions. They are closing their positions. They're sick and tired of it. They know they can't get their money back, so they're closing up and accepting the loss. Once everyone has closed up and accepted their loss, which would make sense with the longs down here who are holding on, fighting into the idea that price is going to bounce from this point, they will swipe this liquidity and then they are going to run. Because you can see in the charts already, the gaps, ladies and gentlemen, is on the assumption that traders who have been running shorts have been paying themselves. That's why there are gaps, or assumed that there are gaps in here. Yeah? I hope that makes sense for you, ladies and gentlemen. Take some time out of trading. It's not about how long you trade for. It's about when you do trade, how well you catch the move. If you are new to the channel, ladies and gentlemen, be sure to like and subscribe, because you know what? Next week, we will bring the fire for you one more time. Take care of yourselves, family. Have yourselves a wonderful weekend. Peace.